Hello and welcome to the Value Trend Smart Money, Dumb Money Show. And I'm your host, Keith Richards. I'm President and Chief Portfolio Manager of Value Trend. Welcome to the show. Today, we're going to look at the emerging markets. Are they emerging or are they submerging? Question of the day. Well, we're going to start off with a broad emerging markets ETF. We're going to take a look at one of these ETFs. And then we're going to drill down a little bit as to try to uncover whether there's an opportunity emerging. So let's get started by sharing the screen. What we're looking at right here is the Bank of Montreal, the BMO, Emerging Markets ETF. Now, the BMO Emerging Markets ETF is like most of the broad sector emerging markets ETFs out there. And what that means is that they are heavily weighted in China. And that's because China's the biggest emerging market out there. So it would make sense that most of the capitalization of this index ETF goes into the Chinese exchange. So that is, in fact, where this ETF, I should say, is focused. Now, what we see on the chart here is what is known as a right-angled triangle. And I didn't draw it for you, but you can pretty much see that the high at the beginning of 2021 has led into a series of two follow-up peaks that were progressively lower. Meanwhile, the troughs are moving in either a symmetrical rising lows or flat lows. Either way, we're not getting lower lows, and yet we did get lower highs for the balance of 2021. This is either a symmetrical or a right-angled triangle, and I don't get too caught up in the semantics of identifying the exact consolidation pattern that we're looking at, but it's pretty clear that the emerging market ETF has been consolidating. Now, typically what happens after a consolidation is they either break out to the upside or they break down to the downside, and you don't know which way they're going to go. So we really want to keep an eye for a breakout. So if you happen to be following this ETF and you find that the market, in fact, breaks the last high, so that was somewhere near, call it 24.30 or so, and maybe the ETF reaches 24, 24 and a half, 25, something like that, then you will probably be looking at a bullish breakout. However, if you see a breakdown of well below 23, let's say 22 and a half, that would imply a breakdown to the bottom level of this potential triangle formation. So one is bullish, one is bearish. You don't know where it's going, and all you can do is watch and see what happens. So I would not endorse buying an emerging markets ETF right now, but we can take a look at some of the internals. So first of all, one of the reasons, not the only reason, in fact, we're going to look at a big reason why this ETF has not been doing well for much of this year, but one of the reasons that has affected literally all of the emerging markets economies has been a rising US dollar. So this is a chart of the US dollar, and you can see that it was pretty low at the very beginning of the year. And since then, it actually looks to have formed a little bit of a double bottom, although it has not broken its neckline. So this may end up being a failure at this point. But whatever the case, the US dollar on a worldwide basis, so it's against a basket of currencies, it's not against the Canadian dollar, has gone from roughly 89 to 90, almost 94. Okay, so that's a fairly significant 4 to 5% slam to the upside, which definitely impacts the emerging markets because they're trying to sell their materials back to us, and and when they're buying at a higher price dollar. So keep that in mind, that it's not great for their economy to have a higher US dollar, their economies, I should say. And in fact, a falling US dollar can be very good for emerging markets. So that's one of the reasons that perhaps that index has struggled. But the other index reason for falling has been the percentage of the Chinese index in that broader based emerging markets ETF. And in fact, within the BMO index, it's literally 36% in Chinese stocks. Well, guess what's happened to China? This has happened to China. So we at Value Trend, I should disclose, recently bought a position in this ETF. This is another BMO ETF, and it's the BMO China ETF. It only buys or holds, I should say, A class shares, meaning that these shares at least meet certain accounting standards. Even that is kind of a tongue-in-cheek statement when you're dealing with China, but apparently they're the better quality stocks within the Chinese exchanges to own. Now that exchange has suffered quite a bit, especially because of the technology shares, the internet shares, the educational shares, and recently the real estate shares. So they were considered the better quality companies on the exchange. So of course, this particular ETF has fallen like a brick. Now, we're wondering if this is opportunistic because it's come into a support level which has been hit before, literally since 2018, and it does seem to be finding some support. But if you recently have read any of my blogs on the Chinese markets or watched a video I put out on the Chinese markets, you'll see that it's a very early trade, and I suggest that anybody looking at buying into China is buying into a speculative market right now. So we at Value Trend bought a very small first step in to the Chinese markets. We tend to move in steps, usually 2 to 3 at a time. So if we want a position, say, of 5%, we might go 2, 2, and 1.5 or something like that, or any combination. If we want 6%, 2, 2, and 2, whatever. So the point is that we have only done our initial 2% leg into the Chinese market at this point. So we do think that there might be an opportunity here, but it's early yet. So going back to, if we go back to our broad markets ETF, what I'm going to suggest is you will not see a breakout out of this particular triangle formation until you see China catch a bid. And that may take a while. And it's really more of a mug's game, I would say, to buy into this environment with a relatively strong US dollar and a relatively weak Chinese market, which is a big part of the index. My thoughts on the emerging markets space is that it's probably one for speculators only at this stage. However, that could change upon a breakout, and that's really going to be, I think, up to China and to a lesser extent where the US dollar goes. So I hope this was of some use, and keep in mind that if you feel that your portfolio is not performing the way you would like it to perform, or if you're a bit concerned about the market volatility that we Value Trend have been suggesting is an almost foregone conclusion that we're going to be seeing over the next 12 to 18 months, then you might want to give us a call or a contact. We can be reached at info@valuetrend.ca, and that's an email address. Please shoot me an email. I will answer you directly, and we're happy to help. Thanks for watching.